On to Daily Mortgage Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and then do a deep dive into bank statement loans. But we'll give it a couple of minutes here to go live on all the different platforms and give everybody a minute to tune in. We did put the comments on the screen there, so if you want to drop a comment while we wait, feel free to. Appreciate everybody tuning in early, was already dropping comments. So we'll get started here shortly. Hope everybody had a great weekend and is ready to get back to it for the loan officers out there. And we'll get started here in just a minute. We are streaming this live on YouTube, Facebook, and LinkedIn. So we want to make sure we have time to go live on all the different platforms. All right, thank you for the comments. Adam, Warren, tuning in nice and early. Julio, appreciate it. Everybody dropping comments there. And it looks like we are good to go. So we will go ahead and take the chat down here, and then we will get started. Feel free to keep dropping comments there in the chat. But it looks like we are live on all the different platforms, so we can go ahead and get started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. Every weekday at 11 a.m. Eastern, we do this show where we go through different live rates and we do a deep dive into a different topic every day. Now, we are a correspondent lender that specializes in non-QM loans. So today's deep dive is something very familiar with us, which is bank statements. Now, bank statement loans are probably, well, definitely the most popular non-QM loan right now, especially when it comes to primary residences. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into bank statement loans here later. But before we do that, just like we do every morning, Nick, let's go ahead and pull up our pricing tool and go through the different rates for today for a few different programs.
All right, let me switch my screen and we'll check it out. So, as Kyle mentioned, this is our pricing tool for our team here of mortgage professionals. This will show us the general rates and the APR, including all the fees. For today, it is July 31st, just after 11 a.m. Eastern. So all the programs are pushing live rates as we speak. If you'd like a full breakdown of all the fees and itemized loan estimate, please get with one of our team members. We have over 300 loan officers in 24 states for primary and second homes, and we can do our DSCR business purpose loans that we love to do in 44 states. For our demos today, we'll set up a scenario that we can do for all the different programs so we can compare across the different options. So we'll set a loan amount of $400,000 for all our demos. We will set an LTV of 80% loan to value, 20% down payment. We will set a desired price of $99. That means we're going to ask the computer to find the best rate at one discount point in cost. And we'll compare our loan programs here. We'll start with conforming conventional, then we'll check out our FHA rates, and then we'll go into expanded guidelines, also known as non-QM, where we have over 5,000 programs with alternative income, including the topic for today, bank statements. We also offer VA and USDA. Remember, VA is only for our eligible veterans and active service members. If you are eligible, let us know. We can quote that up, no problem. Same with USDA. That's only for properties that are eligible. So if you do happen to be shopping for a property in a USDA eligible area, we can quote that, no problem. But today we'll focus on the three most common here, starting with conventional. We'll do a purchase, 30-year fixed, standard loan, primary occupancy, single family, one unit, state of Florida, county of Miami-Dade. And for all the demos today, we'll use an estimated FICO score of 760 and an estimated debt to income ratio of 40. So with those basic settings, as we do every morning, let's check out the rates. Yeah, still a little high from last week, 7.125, 0.875 discount points and costs, final APR of 7.287. So remember, we will use the APR to compare across the programs. Here we're about as high as we were last week with all the recent Fed changes there to the rates. So if our customer doesn't qualify for a conventional program for any reason, typically the next option we go to is an FHA program. FHA does allow a little more leniency on credit type of events as well as a higher debt to income, but we'll keep everything else exactly the same so we can compare across the program's APR apples to apples. So for FHA, best option here, 6.5 rate for 0.875 discount points in costs, and a final APR of 7.088. So just as it is every day, in this example, as we like to do in the mornings, FHA is actually a little bit cheaper for a customer that qualifies for both. So definitely recommend our customers don't discount the FHA. It's not just for borrowers who might need a little bit of extra help on the DTI, but it actually could be cheaper in this example. And for our borrowers that have to use FHA in order to use an extra DTI or get around some credit issues, it is great to know that this APR includes the upfront mortgage insurance and yearly mortgage insurance that is required for FHA. So great options here. Now, where we love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either. So many other banks or lenders don't have other options, but that's where we shine here with our expanded guidelines, also known as non-QM, where we have over 5,000 other options, including the bank statement option that Jose is going to do today. But everything else will stay the same. You notice we have a new option pop up now where we can change our income. So full doc is what we use for conventional and FHA. So we'll typically choose a non-QM option to take advantage of one of these other income types, such as asset-related programs we have, our business bank statement programs, our investor programs for DSCR. We'll talk about that in a minute. Our personal bank statement 12-month is the most popular, and that's going to be the one we'll select today. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI options all available. But the most popular by far is going to be our 12-month personal bank statement program, and that's going to be for our self-employed borrowers. Many times our self-employed borrowers will submit 2 years of tax returns and have various write-offs and may not qualify at all or may not qualify for quite as much income as they need. And therefore, we solve that problem with these non-QM programs by using their last 12 bank statements, no tax returns involved at all, in order to determine a debt-to-income ratio here of 40%. In this example, using just their last 12 bank statements, no tax returns involved. So our customers typically qualify for double, triple the income and can therefore qualify where they want it. So these programs are great solutions for our borrowers who may need a little bit of extra help or may need to qualify in general. So it's going to be a little bit higher cost here, but very comparable. Best option here at the top, 7.5 rate, 2.25 discount points in cost, a little more cost there. Final APR of 7.608. So remember the conventional was 7.2 something. So we're within half a point of conventional here using bank statement income, which is amazing. So we love when these options are very comparable, and it's great for our borrowers who need that little bit of extra help, especially our self-employed borrowers. Jose is going to go into a very detailed analysis on this topic though here in a minute, but let's go ahead and move on to our final live pricing examples. So every morning, we also love to do live pricing for investment properties. For our investors, whether you're a first-time investor or seasoned investor, we have some great options. So first, we'll set up the same scenario, 80% loan to value, 20% down payment, and we'll compare our investment property options. We'll start with conforming conventional programs and then check out our non-QM options. Remember, the government programs, FHA, VA, and USDA, do not allow investment properties. So we'll start today with conforming conventional. Everything else will stay exactly the same. The only thing we've edited here is the occupancy to investment. So let's see what adjustments the conventional programs have for investment properties. So the best option here at the top, 7.5 rate, 3.5 discount points in cost, puts our final APR at 7.75, about exactly as it was last week, I believe. So a great option here for our customers that qualify for conventional, but many times our investors would like to possibly go up in rate to lower the discount points. In this case, $14,000 is a lot of money for our investors to invest. They could invest elsewhere. So unfortunately with conventional, there are really no higher rate options to reduce the discount points, but that's where our non-QM programs come in. So for our final demo here, we'll set investment property. 80 LTV, and we're going to check out our non-QM investment property options. So first thing, we need to select our income, and the most popular option by far for an investment property is going to be our DSCR program. That's because it doesn't require any income or employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR ratio, stands for debt service coverage ratio. So if the estimated rental income can cover the PITIA of the mortgage, that's a ratio of 1.00 or higher, aka the property cash flows monthly. Even if the property does not cash flow monthly and the DSCR ratio is under 1.00, we have options for that as well. For the demo, we always set 1.5 so that we can see everything pop up. And the final thing we need to select is a prepayment penalty. We'll always select 3 years. That's the most common. There are options for 0. That will cost a little bit more and limit our loan programs. And there are options for 5 years if our customer wants to hold the property, which will save us some money, but not all programs allow it. So 3 years is the most common. Let's go ahead and check the DSCR rates this morning. So best option at the top, 8.125 rate, but we've solved our discount point problem here. 0.725 discount points, only $2,900 for our investor. They save some cash out of pocket to buy more properties, and still a very comparable rate. APR is 8.182. Remember, the APR for conventional using full doc, income, all that, is 7.75. So we're within, again, half a point of conventional. We love when our non-QM options are within half a point of conventional, because most of our investors, when they compare a DSCR option that you're looking at here to a conventional, even though conventional can possibly get a little bit lower rate, most investors, I'd say 90%, will choose a DSCR program for the flexibility. You can do 1, 2, 5, 10 loans at a time, no income, no employment, buy properties, refinance properties, buy more properties. Very popular, very flexible. Some of these may allow things like credit events, foreclosures, bankruptcies as well with a little bit higher rates. Some of these ones at the higher rates may also allow things like short-term rental income. So hundreds of different options that we have here for our investors. Please get with our team and they can find the best option for you. Now, let me go ahead and switch my screen and we'll get into our deep dive topic for today, which is going to be a deep dive into our bank statement options. So there's a ton of different options for bank statements. I always go quickly through the most popular, obviously, very quickly during our live rate demo. But there are a ton of variations. So hopefully Jose has some tricks up his sleeve for different ways to apply these programs. Definitely very popular. I'd say our most popular program for any primary type of purchase. Investors also use these very commonly, but they use the DSCR program as well. So these are very popular, but let's go ahead and set up your demos first, Jose, and then we'll go ahead and share your screen.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. Like Nick was stating, the bank statement option is the most common non-QM program out there. It is for self-employed borrowers only, right? So that's the key. Now, we do have options where we can combine multiple threads of income type, right? Where we can actually combine a bank statement option, P&L option, if they have a different business that they're using other than the bank statement business, W-2 and 1099. We can actually combine all of those four into one loan. So that is pretty interesting to note, because we do get that question. And we can also combine in the bank statement option where we have the primary borrower could be bank statement, and you could have a co-borrower that is W-2, for example, right? Or in some kind of fixed income. I just had somebody ask me that question regarding one of our loans that I'm trying to put together, and like, yeah, for sure, you can combine that. You just it's not going to be for every program option out there, I would state that, but it is something that is possible. So some of the things you have to worry about bank statement programs, though, would be if there are too many NSS, too many overdrafts, or declining deposit trends. In that scenario, we do have solutions, which would usually be for the self-employed borrower, the P&L, profit and loss program, that would be the workaround for that type of a situation. So the reason that the bank statement option is so popular in the environment is really going to deal with the fact that interest rates increased as they have. Right, I remember January of 21. Time flies. Or December, excuse me, January 2022, where we were having our rates at the threes, right? And then obviously things started going up, and now here we are with those same rates that were at 3% are now at 6.5%. So obviously that has put some pressure on the affordability factor of housing. So all of our self-employed borrowers that have the option have been able to transition to bank statement loans. So whereas there has been a decline in originations on the agency loans, that has been offset by the increase in origination in non-QM loans, specifically the bank statement option. So that's great to note, because at a 90%, for example, under the bank statement options we do not charge any mortgage insurance, because mortgage insurance is never applicable on non-QM loans. So let me share some of our purchase and refi options with you. Our first option here, and let me make this a little bit bigger for you all. Okay. Our first option here is primary residence with only 10% down. So, like I was mentioning, mortgage insurance is not applicable here. So, you have the lowest cost option at 9.25%, with the lowest rate option being 8%. So, those are very good options for using only bank statements to qualify for a primary residence 1 unit property. Now, for our same primary residence 2 to 4 unit property, our ultimate house hack that we like to have, you're looking at a little bit higher rates, obviously, because it's not the common request. So there aren't that many program options for a 2 to 4 unit with 10% down, less competition for the loan. So this is what you get, but you still are able to have the lowest cost option being at 10.25%, and the lowest rate option at 8.5%. So keep that in mind for your primary buyers looking to do the house hack on their first purchase. So now showing you more what's in line with the more usual LTVs. So here at an 80% LTV, you see that the rate drops considerably. This is more in line almost with conventional rates. You're looking at 8.25% is our lowest cost option, and you can buy it down to 7.5%, our lowest rate option. And here we have the same 20% down scenario with a 2 to 4 unit, and you will note at 80% LTV, there is not an adjustment, a loan level price adjustment due to the property type, because there are more options available. So more competition. So that's what you're going to get, better pricing when there are more options. They want your business. So now we go into some investment property purchases. Now we do have an 85% LTV, 15% down bank statement option. I just recently closed one of these. Very good deal. 9.625 is your lowest cost option, with 8.625 being your lowest rate option, 15% down, 1 unit. Keep that in mind, though, that's for the 1 unit. You go to the 2 to 4 unit, your maximum LTV is going to be 80%. You're looking at pretty good rates there as well, because 8.875 Lowest cost option, 7.75. Lowest rate option. And our 20% down option with the 1 unit is the same rate. Again, no loan level price adjustments at an 80%. And our cash out option here now, we have a cash out investment property, 80%, LTV, 1 unit. And our lowest cost option is 9.375, with our lowest rate option all the way down to 7.99%. So that is pretty amazing for our investment property at an 80% LTV. So keep in mind, conventional loans, you would not be able to do this deal full doc cash out on an investment property at an 80%. Non-QM lets us do it bank statement 80%. So that's pretty remarkable. And our investment 2 to 4 unit cash out, same exact rates, which is pretty amazing. There is not a loan level price adjustment for a property type at an 80%, because again, I mentioned there are more conduits at an 80%, so they're competing for our business. So it's going to be more affordable than when they're the only person offering that option. And then the primary, you get a little bit of a break. You saw there, it's 1/8% lower as our lowest rate option at 7.875, with the lowest cost option starting at 8.625. And last but not least, our cash out bank statement for primary, again, same rate as the investment at 1 unit. So 1 unit investment primary, primary is same rate, 1 unit and 2 to 4 unit, and in investment 1 unit and 2 to 4 unit also the same rate, no loan level price adjustments at an 80% loan to value.
All right, great. I don't see any questions here, so I think we can wrap it up. Lots of great options for bank statements. If you want somebody to go ahead and walk you through, we have over 350 loan officers all across the country, so you can visit us at themortgagecalculator.com. Remember, we do this show 11 a.m. Eastern every day, where we pull up the rates and do a deep dive into a different topic. So definitely tune in daily, 11 a.m. Eastern time. Thank you, everybody, for tuning in today. Thank you, Nick. Thank you, Jose. And we hope to see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.